From New York to our TV and radio audiences worldwide, welcome to Balance of Power, where the world of politics meets the world of business. I'm David Westin. We will start with the markets today because it's Monday and we're off to a very brisk start, I think it's fair to say. Abigail Doolittle is here to tell us about it.
Brisk is one way to put it, David. The risk rally is certainly in full effect. It feels as though the animal spirits have once again been stirred. That's been the case really since early March, even though part of March was clearly a downtrend. But when the Fed first came in with that emergency rate cut, since then, central bank action after action. Last night, of course, Federal Reserve Chairman Jay Powell on 60 Minutes basically saying the Fed is standing by, ready to do whatever it takes. So unless a really serious shock comes along, let's hope that doesn't happen. Investors are basically investing with the Fed, David. I mean, an analogy, I'm not really much of a shopper, but if all of a sudden someone were to offer me an unlimited credit card and say you don't really have to think about paying it back at some point, I may actually be induced to go shopping. And that's what we see what's happening with investors, especially for small cap, up nearly 6%, and energy now up 7% on the day, David. From the March lows, energy is now up more than 60%. It's really pretty incredible, this risk rally we have going on.
Yeah, unfortunately, Abigail, we actually do ask you to repay your credit card sooner or later. Is there any hesitation in the bond market with treasuries as we have to go out with something like $3 trillion this quarter?
The issuance is just incredible, really stunning. A lot of market experts wondering whether or not there will be the demand there. We do have a little bit of a pullback for bonds today, but nothing along the lines of what would be stunning to the market. One expert did join us for a Bloomberg segment last week saying from a technical standpoint, it does look like bonds are set to drop from here. Whether or not that comes on a risk on mode where investors simply don't want bonds, or if there is something scarier there where there's not demand, is to be seen. But that's certainly a good point, because at some point we will have to pay for this. But right now, Jay Powell is saying, don't worry about that. Let's just get out of this crisis. Investors are listening.
Okay, Abigail, thank you so much for that report. That's Abigail Doolittle reporting on the markets. Well, one of the things that may be really encouraging equities is this report out of Moderna that their candidate for a possible vaccine for COVID-19 has some encouraging indications in early stages. We talked earlier today with the CEO of Moderna about when they go to the next phase.
We are finalizing the protocol for the phase 3, which is the last clinical study before approval, which we are hoping to start in July of this year. The study will be several thousand healthy subjects across many countries. We are finalizing the protocol as we speak with the FDA, and we are hoping that we can start in July as is our plan.
And we want to bring in now the man who covers really all the healthcare industry for us at Bloomberg. He is Drew Armstrong. Drew, we all want this to work. We're all eager for it to work. But at the same time, as I understand, it was a fairly small test they had so far, and it wasn't even designed to figure out efficacy, was it? It was mainly for safety?
Yeah, I mean, this is good data, and I think it's, it has passed one of the early checkpoints here, which is the, small early safety study. It will not be the last look at safety, and it is certainly only gives us a hint of efficacy. But, it's good news. I mean, it's the news you would want to hear. It tells you that there are signs that this does some of the right things in a test tube that you would want to see against the virus, that it creates some kind of immune response here, albeit one that hasn't been tested in the real world, and that it has a side effect profile and a safety profile that looks, in this small sample, in line with other vaccines.
And Drew, to be as precise as we can with somebody like me who's not a biophysicist by any chance, what it did, it showed that it created antibodies. We're not convinced what those antibodies might do, right?
Right. So, there's a couple of different subsets of things that they're looking at. They're looking at, did this vaccine create antibodies that go and then bind to the virus? Those are called binding antibodies. But, it's not just enough for the antibodies. Those are kind of the reactive parts of the immune system that are created when you're infected with something. But do they also neutralize the virus? And in a subset of this small group of patients, so lots and lots and lots of caveats here, it does appear to have created neutralizing antibodies. Now, the issue is that this has not been put out in the thousands of people that are going to needed to be needed to test this drug in the real world and see how it does in proper real life hand-to-hand combat with the virus. We don't know that, and we won't know that. We also don't know things like how long does this protection last? Is it effective in all groups of people? there are more unanswered questions than answered ones from data like this. But it is still good news, and you can obviously see the market broadly reacting as well as Moderna's stock.
Drew, on Friday, we heard from the president and his team about this Operation Warp Speed, where they're going to try to create a vaccine by the end of the year. Does the Moderna effort have anything to do with that? How does it fit with what Warp Speed is doing?
Yeah, so Warp Speed is kind of a broad catch-all for a variety of government efforts that are already ongoing. It's a bit of an umbrella that picks up some pieces of things that have been in progress for a long time. The idea with Warp Speed and those other efforts is essentially to help companies that are developing these partner with government, provide all the resources they can, and eliminate some overlaps. It certainly seems likely, and we know that Moderna has been working closely with the U.S. government already. This trial was run with the NIH. That it will be part of that accelerated effort. If things continue to look good, that probably means producing some doses of the vaccine at risk before you know exactly whether or not they work. The company has said that they're planning on launching the second phase trial imminently, and a phase 3 trial that will give us the final answers on the efficacy of this vaccine in July with several thousand people.
Finally, Drew, there's been a growing discussion about when someone gets a vaccine, whom will it be available to? The WHO has been meeting virtually today, and President Xi of China came out and said if China gets it, it's going to be available to everyone. If Moderna comes up with a vaccine or someone else does, is it pretty clear it's going to have to be made available to everyone?
Yeah, I mean, that's a fantastic question. And I think one of the things that policymakers are going to have to figure out is that, we're going to see batches of this, of whatever vaccine, if a vaccine is successful, roll off the line, in the millions at first, but not in enough for everybody to get this at once. I think what we've heard from most people is that the first folks to get this are going to be frontline healthcare workers, who are the folks who are most at risk of infection, as well as elderly and vulnerable people. And then probably the rest of us after that. So, you can expect to see a phased rollout of this vaccine. I think that there is a lot of pressure to make sure that this vaccine is global, but there's also a current of, vaccine nationalism, both in terms of economic protection, population protection, and also international prestige in the chase going on here.
Okay, Drew, thank you so much for being with us. That's Drew Armstrong, who really is responsible for healthcare reporting for Bloomberg. Meantime, coming up here, our editor-in-chief emeritus, Matt Winkler, will join us to explain why the Republicans shouldn't be that worried about helping out the blue states. That's coming up next on Balance of Power on Bloomberg Television and on radio. Welcome back to Balance of Power on Bloomberg Television and Radio. I'm David Westin. It is time now for First Word News, and for that we go to Mark Crumpton.
David, thank you very much. Attorney General William Barr said he doesn't expect the Justice Department to open a criminal investigation into former President Barack Obama or Vice President Joe Biden. That despite prodding to do so by President Trump. The Attorney General told reporters at a news conference today he won't allow the Justice Department to be used as a weapon to, quote, drum up illegitimate investigations. Germany and France have agreed to back a plan for a $543 billion recovery fund to help the European Union weather the coronavirus pandemic. In a show of unity, German Chancellor Angela Merkel and French President Emmanuel Macron appeared together in a virtual press briefing today amid deep divisions over the recovery fund. The biggest obstacles have been bridging differences between richer and poorer nations. More than 108 million people in northeast China are being plunged back into lockdown conditions. A new and growing cluster of coronavirus infections has led to the abrupt reversal of the reopening. Train and bus service have been cut in Jilin province and other areas, and people have been ordered to stay quarantined. India recorded its biggest single-day surge in coronavirus cases today. Authorities are largely blaming the jump on the return of hundreds of thousands of migrant workers to India's villages after losing their jobs in India's population centers. India has had more than 96,000 cases, the most in Asia. More than 3,000 people have died. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. Well, Senate Majority Leader Mitch McConnell warns of a possible blue state bailout, that attempt to try to get some support for state and local governments. But Bloomberg's editor-in-chief emeritus Matt Winkler has taken a closer look at the facts. He says maybe it's not quite what Mitch McConnell says it is. And we welcome now Matt Winkler to tell us about his piece on the Bloomberg today. So Matt, welcome. Give us a sense of what you found.
Thank you. Well, we basically took a look at every aspect of economic performance of blue states and red states. If we go by the 2016 presidential election, there were 30 states that voted for Trump, which would be considered red, 20 that voted for Hillary Clinton, that would be blue. And really, by every measure you can drum up on the Bloomberg, gross domestic product, personal income, tax revenue, total employment, job growth, and the labor participation rate, not to mention the municipal bond market, where blue states have been more coveted in their debt. That is, they've outperformed red states in the past 5 years. So every single category of economic performance, the blue states have done better than the red states. And I might add on the last one, labor participation rate, it actually went down in the past 5 years in the red states, and it went up dramatically in the past 5 years in the blue states, meaning that people felt better about where they were, what they were doing with their lives. They wanted a job, and they got a job.
So Matt, I'm not sure that the Bloomberg itself would show you this. I'm not sure it's arithmetic, but do we have any idea why that might be? I mean, is it possible blue states tend to spend more money in their budgets and tax more, and that actually is an investment that redounds to the benefit of the economy?
Yeah, I think you've said it just right. There is, and I didn't go there, but there is, if you will, an attitude or a policy among, generally speaking, Democratic governors and their legislatures to invest as much as they can in their people, whether it's health care, whether it's infrastructure, and they generally do that. The red states are tax averse, and therefore their ability to raise revenue to support things like health care and infrastructure isn't nearly as robust. And that goes back quite a way. So, it has a lot to do with policy.
At the same time, Mitch McConnell and other Republicans do have something of a point with some of the pension obligations of the state. But I actually went back and did a little research, and Pew came out with a study last July, actually. And it's interesting the states that do the best and the worst, because some of the worst include New Jersey and Illinois, blue states, but also Kentucky, Mitch McConnell's own state. On the other hand, the best includes South Dakota, Tennessee, and Wisconsin. So it's not necessary, it doesn't seem to break down naturally on red-blue lines.
Look, on that very issue, unfunded pensions, for the most part, it's a kick the can down the road policy, whether it's blue or red. Having said that, Rhode Island for decades was considered one of the worst, if not the worst, for unfunded pension liabilities. And Gina Raimondo, the governor, first as treasurer and then as governor, fixed it. And the way she fixed it is, for one thing, she said, we're going to tax truckers who are going through Rhode Island between New York and Boston. And it was a very unpopular tax, like most taxes, but it did make a big difference. And Rhode Island went from being in the bottom half of U.S. states in economic performance before she was elected, or as she was elected, to the top half before her first term ended. So she is not alone. Jerry Brown did something similar. I mean, he simultaneously cut spending and raised taxes. And so when he got to his third term in 2011 as governor, he served 4 terms. But when he got there, he did the kinds of things that made California an ideal choice for investing. And the proof of that is that in the credit default swap market, California outperformed every country and every state perennially for the next 3 or 4 years of his third term.
Yeah, who would have thought Jerry Brown in California? It's a fascinating story, as is Gina Raimondo, actually. I agree, up in Rhode Island. Thank you so much, Matt, for being with us. That's Bloomberg Editor-in-Chief Emeritus Matt Winkler with this really important piece out on the Bloomberg today. Coming up, we're going to be talking with Lloyd Blankfein, the former chairman and CEO of Goldman Sachs, about his appraisal of the crisis and what's being done about it. That's coming up on Balance of Power on Bloomberg Television and on radio. Welcome back to Balance of Power on Bloomberg Television and Radio. Mark Zuckerberg, the head of Facebook, is speaking right now to the European Commissioner for Internal Markets, and we're going to go join that right now in progress.
Very valuable as a source of data for governments to make these decisions. And then, looking forward, this is clearly going to be a very big economic recession and long, painful recovery as well. And one of the big things that we focus on is helping small businesses around the world. There are more than 25 million small businesses that use our services in Europe alone. The vast majority of them use our services for free to have a presence online and reach people across Facebook and Instagram and WhatsApp and Messenger. A smaller set of those advertise, and that's basically what makes up our business. But small businesses are the vast majority of our business, so we're very aligned with making sure that small businesses can grow and thrive. And right now, they need a few things to make sure that they can survive and get through this period. One is just financial support, and we launched a $100 million grants program that's going to provide grants to more than 30,000 small businesses around the world, including a bunch across Europe, to try to provide financial support. Another piece is just that through this period, a lot of businesses are relying more on internet tools, right? A lot of businesses that previously just had a physical storefront are coming online for the first time, and a lot of ones that had a digital storefront before are now finding that that's their primary way of selling stuff and reaching customers. And we're working on a number of different tools to basically accelerate that. And in fact, we actually have a big announcement coming up tomorrow where we've had some long-term commerce tools that we've been working on building. And I don't want to preempt my announcement tomorrow by saying exactly what it is now, but there are a lot of things that we've been working on for a while. And since this crisis hit, I've been meeting with our small business commerce team every single day to make sure that we can accelerate that work, because it's going to be, I think it could be very helpful to a lot of small businesses and getting through this period and thriving as they come out the other side, doing more of their work online. So there's certainly a lot of different fronts on this, but I think more business and more life will be conducted online coming out of this. And we need to make sure that the tools that we've built are robust enough to support that and help support the economy and recovery.
The exit phase and most likely the beginning of the recovery phase from COVID-19 will coincide with the publication of new European Commission proposals on the regulation of online platforms. Now, before addressing specific topics, I'd like to relay the first questions from the audience, which is addressed to Thierry Breton. And the question is the following. Platforms carry out a wide range of activities, from social media to app stores to facilitating travel bookings. Do you think, Commissioner, that regulation should vary to take account of these different activities? And if so, how?
No, you mentioned it. We are working on the DSA. Probably what you had in mind when you said that we are working on this, and it's extremely clear that we are working on the DSA, and that of course we intend to present our proposal at the end of this year. But coming back to your question, and coming back to what Mark just said, it is true that we have seen in this crisis a lot of habits changing. Mark was mentioning SMEs, and it's absolutely true. Online food sales grew drastically during, of course, the crisis, more than 100% in almost every single member state here in Europe. So it means that people are used to it now. And they have been educated. And when you start to do this, of course, you will use it. So it's true that we. I just want to come back of what we learned during this situation, and what I was keen to enhance is again that we have to invent. We have to invent together our future. We have to do this. We did it. We have been able to invent a way, working together during this very period, and again, it wasn't, it was not granted. We just invented. We were in contact, not every day, but at least every week, with all the platforms, explaining the problem that we had, finding solutions together, without any other concerns, but to be able just, to serve, just being able to help, without any other things behind the mind. And that's for me extremely important, because of course platforms are playing a huge role today and tomorrow. And if they want to continue to play these roles, they have to learn how to discuss with us, cooperate with us. And Mark knows this very well. I told him, as I said to everyone, we understand very well your business. We appreciate your business. But it's not us who should adapt ourselves to you, but vice versa. This is the way it is. We are a democracy. We are representing 450 million people. And of course, we need to make sure that this will continue with our own democratic systems. And now regarding the platforms, of course,
we've been listening to Mark Zuckerberg of Facebook in conversation with EU Commissioner Thierry Breton. You can continue to listen to that on Live Go. But in the meantime, here, we're going to be joined by Lloyd Blankfein, the man who led Goldman Sachs through the great financial crisis. And this is Bloomberg. Welcome back to Balance of Power on Bloomberg Television and Radio. I'm David Westin. For 12 years, Lloyd Blankfein served as chairman and CEO of Goldman Sachs, and we welcome him now back to Bloomberg. So thank you so much for being here, Lloyd. When I would talk to you when you were at Goldman Sachs, you said what you basically did was assess risk and manage risk. So do some assessments of managing for us right now in this pandemic crisis. As you look at it, where do you think we might be misassessing the risk and or mismanaging it?
Well, there's a lot that's unknown and unknowable, and moreover, I know that no one knows, and so that's an aspect of this, because you can dig and dig and dig, but basically, I think with this current moment, we're not so much in the realm of forecasting. I think we're in the realm of contingency planning, and I think one of those contingencies you have to plan for is, the surprise. Most of the time, in my former life, surprises were almost always bad surprises. Something would go wrong. And of course, we were so big and extensive, there's nothing that could go wrong anywhere in the world that wouldn't affect us. But I would say in this particular moment, and we're seeing a little bit of that today, the tail, i.e. the possibility of something highly improbable happening, could actually be good for the market. So somebody announces they're making progress with a vaccine. So it's a funny situation where if I was watching the news and something flashed on and there was some surprise coming, I'm actually looking forward to hearing it, whereas before it was almost always going to be negative.
One of the aspects we're seeing in this is what appears to be a very difficult choice between, on the one hand, public health, safety, well-being, lives, and on the other hand, the economy. Do you think that we're striking that balance more or less the right way?
Well, just to question the predicate of that, I think that's a real, that juxtaposition is sometimes a bit off. I think there's health issues on both sides. obviously, and a lot has been talked about this now, wherein, extreme poverty, obviously, is a health risk and all the things that proceed from it. And also, depression, drug addiction, suicide at an extreme, but basically life expectancy comes from, a fall off, a collapse in GDP. And this is unprecedented. So this would be off any of those charts. So I think it's not just health versus economy, it's health, it's economy on both sides. And by the way, the health issues may be more neutral than some people think. Once the curve is, the original intent to flatten the curve was just to stretch out the exposures that people would have so it didn't overwhelm the healthcare system. But the fact of the matter is, I think, unless we're going to hunker down until a vaccine comes up or until the virus is obliterated from the face of the earth, which I think is too long to keep the whole country on welfare, eventually people are going to go back. And when they come back, the infection rate is going to go up. So I think we're just postponing the exposures and the infections, of course, to a time when we're better able to deal with it than we were at the beginning. But we're not going to avoid health problems from this virus unless we wanted to freeze the economy for too long than anybody can really think, could really contemplate.
Well, Lloyd, that's actually one of my questions, which is whether it's on the health front or for that matter on the economic front, extraordinary efforts are being made. Are we postponing what happens or are we actually changing what happens? Is this a timing matter only? Well,
to some degree, look, if Deus Ex Machina, a vaccine appears, and I know there was some positive news today, but just think it has to go through trials for, we have to make sure it doesn't kill people, make sure it's effective, it has to be manufactured, distributed. That's really, the country can't be on welfare even that long, even if there was, that was something that was magical. We are postponing it, but that doesn't mean it's without help. They're learning things about treating viruses, even if there's not a vaccine. There are treatments that people are aware of. So there is some benefit to it, but not as huge as if there were an ultimate vaccine that would make people comfortable. So I think to a greater extent, we're postponing people's exposure to it. And to some extent, we're eliminating the direst of risks that would happen if the healthcare system was overwhelmed while people had it. But I think in the long run, we have to contemplate that people will go back to work, what kind of economy we'll face. And no matter when you do it, look what happened in some of these Asian countries where they were high-fiving because the virus, the new exposures were way, way down. And notwithstanding that, the second they go back to work, they spike up again. So that's going to be an expectation no matter when you do it. I think when we go forward and look back at this from sometime in the future, if we're going to go through that anyway, people will be very critical if the official sector sacrificed more of the economy than they needed to, even because at the end of the day, I think the exposures are going to be, almost the same.
For Bloomberg television and radio audiences worldwide, we are talking with Lloyd Blankfein, the former head of Goldman Sachs. We've heard a fair amount out of both President Trump and the Federal Reserve, particularly Jay Powell, the chair, recently. And it seems from Chair Powell, we're hearing two things. One is the Fed will do pretty much whatever it can, whatever it needs to really support the economy as best it can. But on the other hand, a lot of caution that this may take longer than we think, it may be more difficult than we think, and even the possibility of long-term damage. How do you assess the possible damage to the U.S. economy over the longer term?
Well, obviously, it depends on how long this goes on. And, you could see, it's easy to see what damage would be. You have certain businesses that come into contact with the public that are going to go away, that were operating at tight margins anyway, that can't afford to wait until they reopen, and some businesses that will reopen at such a reduced level that they won't be profitable, so they won't reopen, and that's damage. And those businesses, unfortunately and sadly, will go out of business. The people who work for them will find other jobs. The economy is resilient, so it will sort out, but it'll take some time. I'm reluctant to use the word permanent. The economy will be changed, but we're all resilient, and it will come back. I think one of the things to consider is how long this goes on. I mean, I think the chairman and the Federal Reserve Board have done an extraordinary job, and of course, I want them to replace. It's not so much a stimulus as a replacement of lost, a substitute for what people would have earned, and try to keep it going. But one of the things that's on my mind is how long can you sustain that? You have, if you have a $3 trillion grant, and I'm talking about the Federal Reserve now and Congress's outright grants and loans, How long can you sustain? Can we have another $3 trillion round in 10 weeks, another $3 trillion round after that? At some point, even if we wanted to do that, will other outside investors and central banks around the world continue to fund the compounding deficit that we're mounting? I think they're doing everything they can. They're doing everything they should. I applaud them in the fog of war to have been so coherent and so quick off the block, but I think it can't go on forever.
Well, it raises the question whether, in fact, there might be some risk to the financial system itself. That was the big problem back when you were managing Goldman Sachs in 2008, 2009. Thus far, it hasn't been that big a problem, but now the Fed is starting to worry about things like commercial real estate. Do you see any risk on the horizon for the financial system?
Look, anybody who says there's no risk on a horizon is crazy and blind. I'd say the financial, again, I'm not talking as an insider now, but as a pretty alert and attentive observer. I know that the balance sheets and the liquidity of banks were extraordinary. And I don't necessarily mean that as a compliment to the people who have been and are running the banks. I think the legislation post the financial crisis and the way in which the Federal Reserve tests for these, for liquidity and safety and solvency have been extraordinary. And the banks have been on their toes and have been very well capitalized. And it's worked out pretty well. I would say that the most historical critics of the banks would have to acknowledge that they're very liquid and fairly safe. Now, can I contemplate that something goes on so long, there's huge, massive defaults, blah, blah, and all that stuff? Sure, but I would say that on a list of 10 things to worry about, or even 25 things to worry about, I don't think that should be high on that. It should be on the list at all right now.
So beyond the financial system overall, are the banks less attractive as an investment as they used to be? I mean, certainly we're seeing that in the airlines right now. We're seeing that in hotels. And you see things like Berkshire Hathaway trimming back on Goldman Sachs as well as JP Morgan in the investment. Are they a less attractive investment given this crisis?
Well, I think historically the banks have been a bellwether for, the good and the ill of external events, because ultimately it's the, kind of the choke point for the financial system. So if people have bad credits, people worry that maybe banks' balance sheets are overstated because they really have bad loans that they're not, in other words, that's always the concern. And so they trade on lower multiples. But as I said, it looks to me that a lot of the aspects of this are not, look, it's bad for banks. Loan growth is slow. You worry about the existing loans on your balance sheet. At the same time, there's a lot of financing and refinancing going on in the market. There's a lot of people have to adjust their portfolios, and so there's a lot more trading and opportunities in that part of the market. So I don't know that every aspect of this has to be bad for banks. But if you're asking me, there's reality, there's the economy, and there's markets. Markets have certainly ever since the financial crisis have been very have always had an arched eyebrow when approaching investment in banks.
How are we going to pay for all this? You mentioned the trillions of dollars, both from Congress and also from the Fed here. At some point, don't we have to pay for it? For example, do you agree with Larry Fink, who says we should be increasing corporate tax rates at some point to 29%? At the same time, Larry Kudlow at the White House is saying we should cut them to 10%. Are we going to have to increase our taxes at some point?
Well, I think at some point revenue will have to be raised, but really the way we're paying for it is we're borrowing. And one of the most extraordinary things to me to try to explain, even to myself, is how willing people are and governments and foreign governmental institutions are to hold U.S. treasuries. In other words, to lend to the U.S. Treasury for 10 years at 60 basis points. To a country with deficits as wide and growing wider as they are right now. And one wonders, 10 years from now, when you return those dollars to the lenders, what are those dollars going to be inflated, or what are they going to be worse? Are people going to need to print money? And ordinarily, you would expect with the deficits this high, people would want higher and higher rates. And this goes to the benefits of the US dollar being the reserve currency in which governments around the world have to hold their reserves. So if they have to hold their reserves in dollars, they buy dollar denominated securities, and that helps fund our deficit. But we shouldn't let this go to our heads forever. I know there's a school of thought now that says you can run deficits and make them larger forever, but that only pertains while people are willing to finance, and who knows when that attitude changes, or when our investors in the U.S. paper decide they need to be compensated a lot higher for the risks they're taking.
Lloyd, when you were running Goldman Sachs, you spent a lot of time with China, dealing with China. U.S.-Chinese relations, I think it's fair to say, are pretty rocky right now. They weren't great from the time that President Trump came to office. They seem to be getting better, but now we're really blaming them for the virus. Do you see a possible permanent change in U.S.-Chinese relations, and, for example, the possible delisting of Chinese stocks on some of our exchanges?
Well, I mean, there's a lot of things. There's obviously a lot of elements that are being done here. The overall relationship is becoming competitive, and it's not somebody's creating that competition. The competition is occurring because China is a rising power and the U.S. is an established power, and China is elbowing its way into a space, and the U.S. isn't dying to move over. And that's happened, a lot of times in history. And so you expect the natural. There's a lot of rhetoric. Things could be a heck of a lot worse than they are now. But in reality, there's a lot of we think of this thing we think of China differently, I'm sure, than China thinks of China. We see the China that has a GDP almost the size of ours, and by some measures, the same size as ours, growing us, but yet they have 4 times the population. And so if you're thinking about the country per capita, it's a poor developing country. If you think about the total economy of China, it is a fair competitor for us, operating at our scale of activity. So, China, who still has projects funded by the World Bank as an emerging country, could have an armed forces on the scale of the United States, because there the gross product of the whole country matters. But if you're feeding the population, the per capita GDP matters. And so we tend to see each other different. China kind of feels a little bit more victimized, and we feel that they're not paying their fair share. And the answer is, that's the perspective that has to be reconciled. But that's still the most important relationship in the world. They have competed with us unfairly in a lot of ways, which they feel entitled to because they were a rising power on the way up. But we are saying now a new day has dawned, and so we have to compete on a level footing. And I understand their perspective, I understand ours, but we have to make that relationship work. And I'm not sad, and I'm glad in a way that we sort of put down the cudgel and are making them act, a way consistent with the way we would have to act in the world. And so I thought that was a little bit overdue and necessary, but I still think preserving the relationship in a positive way is going to be essential for the world to come.
So Lloyd, finally, as I said, you spent a career managing risk. There's a lot of risk around right now. You might have a little spare time on your hands. Are you open to the possibility of maybe helping out a bit? For example, with the Biden campaign, we do have a presidential election coming up.
Well, I have, I would help. Listen, I would help anybody. Given my busy schedule, I would certainly help. And look, I'm invested. I'm invested in the world. I mean, at this point in my life, I get up in the morning and I'm not reviewing the P&L of a particular firm or worried about moving this thing around or that thing around. I'm really, frankly, worried about and for good reason, the state of the nation, the American way of life. I worry about it because of what the disease is doing, and I worry about it because what we're doing to ameliorate the effect of the disease. I worry about the disease and I worry about the cure at this particular time. And so I think times are rough. I have a lot of sympathy for the decision makers. Very easy to be a critic on the sidelines and say in hindsight, you should have done this or you should have done that, because you won't be challenged later. So I have sympathy for the decision makers. But that said, the actual decisions are very important. And let me tell you, if I could contribute, I would. Who wouldn't at this point?
Exactly. Thank you so much, Lloyd. Really appreciate your spending some time today. That's Lloyd Blankfein. He was, of course, chairman and CEO of Goldman Sachs for 12 years. And coming up tomorrow, I'm going to talk with Brian Moynihan, the chairman and CEO of Bank of America. Coming up here right away, we're going to have Representative Dwight Evans from the state of Pennsylvania. That's coming up on Balance of Power on Bloomberg Television and on radio. Welcome back to Balance of Power on Bloomberg Television and Radio. I'm David Westin. Representative Dwight Evans, Democrat of Pennsylvania, represents a district in and around Philadelphia, and we welcome him now to Bloomberg. So, Congressman, thank you so much for joining us. As I look at these numbers, I'm struck by the fact that it looks like a third of the cases in all of Pennsylvania are in Philadelphia. Tell us about the situation in your home district.
Well, right now, David, kind of waiting for the governor has a system with a green light, red light, blue light, that goes across the system. And basically, Philadelphia particularly is still pretty much shut down. They're having a lot of economic impact, obviously, on business, but as well as the public health. Our hospitals are also been taking a lot of weight, obviously not as much as what New York has been doing, but basically we have had our challenges too. So we're basically trying to figure out a way, how do we deal with this pandemic? People are very much cooperating, and they're trying to figure out what's the best way to handle it.
And is there pressure within your district from your constituents to get back to business, basically, get back to work? Because a lot of people are out of work.
Well, there's no question that is a factor, but also the larger factor is about the health issue, the issue around testing. That's a huge issue. People have real uncertainty about this virus, and testing is a huge issue. They're very much concerned about, do they go back to work? Do they stay at home? So they're somewhat torn.
Where are you on the curve? We all talk about flattening the curve, turning the curve back down around. Are the number of cases, the number of deaths coming down in Pennsylvania and specifically in your district?
It's sort of holding, I would say to you. Obviously, Philadelphia, more so than any other part of the state, is greater in the region that I'm in. We're in the southeast part of Pennsylvania, and basically the governor has gone from the western part of the state heading towards the southeast, where Philadelphia is. So the numbers are greater in the southeast than they are in the western part of the state.
Democrats in the House of Representatives have proposed, I think it's called the HEROES Act now, the next tranche, the next level of relief. What would that do for your district?
That would be huge, because for essential workers, that would be investment opportunities. The rebates would be huge. Our state and local governments would also, our state government has a huge problem with something like $4 billion. Our city government is in the ballpark of like $700 million. So that's a huge problem. And then we have our mass transit system, which has our airport, our mass transit system, our airport. And you're talking about a city with something like 25% poverty. So obviously, if you take the poverty and you take the pandemic and you put the pandemic over top of the poverty, we have some real challenging times. But we have some good people. They are sticking, and they understand that this is no fault of anybody on. But we will get through this.
Your district, as I understand it, has a very substantial African-American population as well. We've seen in various states a disproportionate effect on African-Americans and Hispanics, by the way, Native Americans as well, for various reasons, I think because of health care, because of the sort of work that they need to do in close proximity. What's the situation in Philadelphia?
You're correct when you say that. The health disparity has been a huge challenge. As a result, the governor has kind of put a health disparity task force together. He has the lieutenant governor in charge of that health disparity. But, obviously some of those issues around health care are for real and things that we need to deal with. And that's why, in terms of the HEROES Act, was very important in terms of the investments. For example, investments we made about hospitals, investments about testing, investments about tracing. All those issues was very important in the HEROES Act and what we did. So those are things that can take away. Another big issue is the issue around housing, rental, availability, buying housing. Those are also very crucial issues that we have to do. And the other thing that are very big is small businesses. Small businesses are the backbone. There's a lot of African-American businesses, Latino businesses that are there, and 30 to 40% may not make it back. So we're trying to figure out how do we stabilize the small businesses. So between the small businesses and the hospitals, they are very much a part of the engine of the economy of the Southeast.
So, Congressman, as we take a look at this proposal out of the Democrats, the Republicans, at least some of them, I should say, seem to be in no big rush. Do you have a sense of whether that logjam might get broken and when?
Well, I think that, I don't have an idea, but I think that's unfortunate. Look, if you go by the chairman of the Federal Reserve, when he said it correctly, he understands how difficult it is, but these kinds of investments are needed. I mean, the chairman of the Federal Reserve said that. And I don't think we can afford to wait or be patient, because I already told you about the issue about homelessness, the issue about food banks, things of that nature. I don't think we can afford to wait. And I think that we're at a critical point where, we did well with 4 packages. It'd be ideal if we work together and get this done. So I don't think we have that luxury of waiting based on where our economy is. And I agree with the chairman of the Federal Reserve and what he has stated, because the longer we wait, the more damaging it is to our economy.
You mentioned the earlier packages that have already gone through. I understand you think it's really critical you have this next one as well. But with the ones that have gone through before, as far as you can tell, did they go to the places in your district where help needed to be gone?
Well, the PPP, it started out, we had to make some adjustments to it. We got CDFIs involved, we got minority business organizations. We're trying to get to the small businesses and to make it more accountable. Because as you know, the system basically is driven by banks, and then there's accountability regarding the small business. So there was still some work in progress. It wasn't perfect, but it did do some things. But we got some more work. Look, ideally, we have to address the public health issue. We got to address that. That in return will be in conjunction with the market. That's the only way that I think we're going to address this issue, is unless we address that public health issue.
Okay, thank you so much, Congressman. Really appreciate it. That's Congressman Dwight Evans, Democrat of Pennsylvania. That does it for the first hour of Balance of Power. We'll continue in the second hour over on radio, where we'll talk with Dr. Walter Orenstein. He's the former head of CDC's immunization program. We're going to talk to him about that Moderna possible vaccine. That's coming up for the second hour. Thank you for joining us for the first. I'm David Westin, and this is Bloomberg.